Robschild. Nothing I say is investment advice. Welcome to the show where we review financial markets through crystal ball gazing. As JP Morgan once said, millionaires don't need astrologers, but billionaires do, and so we begin. If we look deep into our crystal ball, we can see a head and shoulders pattern, at a reverse head and shoulders pattern developing on the S&P 500 starting on December 19th until today. We have sort of the last shoulder. These patterns are best not interpreted until they actually finish forming and then break. It's not good to predict patterns too much ahead of time, but I do like to see these things ahead of time as they're forming. It could easily unform, but we do see that in the crystal ball right now. As I said yesterday, the S&P 500 is clearly in this mode of knocking on the door of the all-time highs, trying to break through, knocking on heaven's door, trying to hit new highs. Of course, the market's largely waiting for the PCE data to come out on Friday. We did have a good amount of data that came out today. The data that did come out showed a little bit more strength in markets than was expected by people's crystal balls, and it caused Fed funds futures to lean a little bit tighter. We saw a change in May. We were originally going to see a cut then, but now it's saying no cut then. But it's still, if you look further out, we're still predicting 6 or even 7 cuts by the end of 2024, 7 25 basis point cuts. So overall in markets today, we see greed calming down a little bit. It's still greedy, but not as overly greedy as it had been over the past few trading days. A few notable things going on in markets today. High yield corporate seems to be falling. I see in my crystal ball a little bit of support there, and for HYT, the fund, a good fund to track high yield corporate bonds. We see a little bit of support at 925. We're currently at 950. So in my crystal ball, I kind of see us maybe getting down to that point before at least pausing or reversing. Again, seems like we're really waiting for Friday's data more than anything. Another notable market, copper, as predicted by my crystal ball reading previously, it is still falling. This is largely because, not just because of the green energy potential of not as much investment in green energy as expected. It has probably a lot more to do with China, the China data that came out recently. They are in a free fall right now economically. Their population has shrunk for the second year in a row, and they are experiencing outright deflation. They are not having the same things going on over there as over here in the United States. A few things are really important to understand about that. Number one, if you look at a lot of economic data, the United States tends to follow what China does. Even if you look at the Chinese stock market, the S&P oftentimes trails behind what their markets do. And so that's one good way to use your crystal ball to see what might be coming. And this gets me thinking, as I've said in some other videos, not crystal ball videos, but the effect of population and how it kind of automatically entails very strong deflationary forces. One idea to think of is just think about food production. We have a certain number of farms that produce a certain amount of food, and if you have populations shrinking, well, we don't need as much food. So what's going to happen to the price of food? It has to go down until enough people divest, the opposite of invest, in that market and probably many more markets. And so, um, you know, it's not often we experience in history a continuing downward slope in population. I don't know if that's ever happened. We've had a bunch of people wiped out all at once in wars and plagues and um, genocides and things like this, but for a steady decline, this is a whole different animal. And so this is something, if we look deep into our crystal ball, we can see some more potential problems stemming from that in the future. Specifically, the potential for more disinflation and greater deflation than most people can actually imagine right now. I think most people are ignoring the population shrinkage issue a little too much, actually, right now. Other things going on, part of the Fed data that came out today showing strength obviously contributed to the 10-year note yield showing bullishness here. This market's seeing a little bit more deflation. When you look out further on the curve, it's 20 or 30 year, it seems to be calming down a little bit. It's not, the yields aren't spiking right now, but it is what it is. The last market data point that I thought was worth noting today, something notable, is the VIX did break higher. This was not foreseen in my crystal ball. I did not see the VIX breaking higher. It looked to me like it was going to be breaking down from here, and so it seems like it's getting nervous, mostly obviously because of the China data coming out from China, along with stronger than expected market data coming from the Fed today. Again, all the markets are really waiting. The next really big piece is the PCE data on Friday. In a way, the best way to look at markets right now is they're kind of gearing up to see, if they're what comes through, what pans out on Friday. And that's all I have for you for financial markets or financial market update through crystal ball gazing. I hope you enjoyed this episode, and thank you for watching. Robschild.